Good morning, all. Every day is the start of something beautiful. Yes, Shakti Institute of Information and Management is excited to welcome you all to the 7-day International FDP on post-COVID-19 challenges and opportunities, a global perspective. SIIMS in this FDP is covering broader areas from finance, industry, education, technology, economy, human resource, and service sector. We would appreciate the immense interest shown by thousands of participants for our international FDP across the country. Today's topic is unprecedented slowdown in banking sector. Now, we have Dr. R. Sharmila, Associate Professor, SIIMS, to introduce the resource person.
A very warm good morning to all. This is Dr. R. Sharmila, Professor SIIMS, extending a hearty welcome to all the participants for the 7-day International FDP on post-COVID-19 challenges and opportunities, a global perspective, hosted by Shakti Institute of Information and Management Studies, Pollachi. We are thankful and grateful to our most beloved President, Dr. B.K. Krishnaraj Vanavarayar, respected Secretary of the College, Mr. M. Balasubramaniam, respected Director, Dr. P. Subramaniam, and Professor Dr. R. Thiagu, Head Academics and Program Coordinator, for their continuous support in organizing the webinar series. Today, we have Mr. Pradeep Kumar, National Credit Manager, Retail Finance, Axis Finance Limited, Mumbai, India, to deliver the topic on unprecedented slowdown in banking sector. He is experienced credit risk professional with a demonstrated history of working in the banking industry for 20 years. He is skilled in portfolio management, financial risk, business relationship management, risk management, and banking. He is strong finance professional with Masters of Business Administration, specialized in marketing and finance from Bharatiyar University. He has served as Director, Consumer Banking Risk, South India, and Senior Vice President, Retail Assets Credit for IDFC First Bank for more than 3 years. He was also Regional Portfolio Manager, HDB Financial Services Limited, Regional Credit Manager, Mortgages for HDFC Bank for more than 9 years. He has also served in various capacities in Standard Chartered Bank, ICICI Bank, and Vijaya Housing Finance Limited. I would like to extend a hearty welcome to the resource person, Mr. Pradeep Kumar, for the session to share his expertise knowledge on challenges in banking sector. I also take this opportunity to welcome all the principal, dean, directors, faculty members of various colleges, professional and people from industry who are online attending this webinar. Thank you.
Now, I request our resource person, Mr. Pradeep Kumar, to take over the session.
Good morning, all, and I welcome all participants. And first of all, I thank the management of Shakti Institute of Information and Management Studies for inviting me and giving me this opportunity. So, basis my experience and what I've learned, or probably what I've heard, I've just tried to share my thoughts, which will be useful. So next 30 to 40 minutes, I will just brief on what exactly has happened to the banking industry because of this COVID. So the topic today is unprecedented slowdown in banking industry or banking sector due to this COVID pandemic. So I think in the last 2.5 months, we have been hearing across our years about this impact of COVID on banking industry, on other consumers, on any related industries or business or whatever. So I know most of you would have already heard this, come across all these points, but today specifically we will address, or I will try to jot out points which is related to banking industry. Okay. So generally, like, this COVID virus and the pandemic that has caused has actually very badly affected the industries across the world, across the globe, and also like, even in India. And for us, like, in Indians, this is one of the worst crises or economic crisis what we would have seen in last 70 years. And this is what most of the experts say. And even like, none of us would have come across this particular situation in our life. So it's going to be tough, and like, but also like, it's a huge opportunity, which probably I'll touch upon when I move on. Then almost 70% of the industries in India are badly affected, and maybe they have to wait at least for 2 to 3 quarters. That is like, maybe 6 to 9 months at least to come out of and see a positive growth. Then the magnitude and the speed of collapse, what we have seen. Initially, we thought it is only just 10 days, probably it will go out. We have seen others suffering, but then we thought, okay, for India, it is going to be like, we are resistant. We are all like not very conducive of this, but still the impact has been very high, and the magnitude and speed, what we see, which has affected the economic activity across the country or across the globe, has been very bad. And there is, I don't think like, any of the industry experienced experts will deny this. And generally, if I see like, all the industries, it is nothing like, specifically to some segment. Almost 90% of the segments are under financial stress, and they're all in urgent needs of funds or ample liquidity to continue with their business. So that is like, next question is how they will do it, or from where the money will come. So who is going to source, or who is going to fund all these companies? And almost like, because of this, see, already there was some crisis going on in our economy, and most of the, you would have seen or heard few banks getting affected, few NBFC issues were going on, and added to this, funding has been dried up. So because of this particular issue which has come up, which was unprecedented, and all of us know suddenly it has happened, we would not have even thought in our dreams like we must be working the way what we have done in last 2 months. So most of the business enterprises have deferred, including MNCs and huge conglomerates have deferred their expansion plans for at least 3 to 4 quarters. So these are the basic things, effects which has happened in the industry as such. So now let me like go into the points which has directly affected the banks. So everyone knows that like, banking system is the backbone of the entire financial of a country or economy. So for us also it's the same thing. And things were quite okay till 2018-19, and then we saw some slowdown happening across different segments, and including financial sector. So because of this particular COVID pandemic, what we can say, like, the stress directly which is going to come into the banks, one is like, it is going to affect the profitability of each and every banks. Profitability today is under tremendous pressure. Okay, and this is particularly with the high credit cost, and also like, the expectant, maybe the with the issues going on or continuing like this, there is a huge chances of the portfolio going bad in most of the banks. So this is one major stress which will directly impact the bank and its profitability. Then also we see like, the major volatility in the equity markets. Today you see like people have lost money. So there is no, it is not going to be a safe haven, or like, the returns are not going to be as good as what it used to be earlier. So people will start diverting their funds to FDs to the banks. So which also is going to be like, sometimes it will lead to excess liquidity, and which will be an additional cost burden to each and every bank. Then if you see like, after March 21st, this is all basically like, I'm referring to the business or the economy of our country. And this is something like, similar which is happening across the globe. So this, since we have been facing this, I can give more thoughts on this, and clarity will be there. Since business has not happened majorly, see, there is banking happening, but still like, it is not expected as like the business. Though today banks are run, at least last 2 months, the banks have run with 10-20% business happening, which has resulted in huge drop in fee income, which is one of the major revenue for all the banks. And this will anyway going to impact the NIM, that is like net interest margin of most of the banks, which will be coming out. Today approximately it is around, it varies with banks to banks and what of related to the cost of funds what they have. So that is going to come down, which is going to affect the margin of profit. Then like most of the retail loans which were actually supporting the banks to run and probably helping in the cash flow, and all those retail loans, the demand has come down, and it is basically like people are not moved out, they are worried what to do. So that demand has come down, which is again like going to affect all the banks, because almost like most of the banks in India, we are all into retail, which almost like 50% is from retail business. So when there is a crunch, it is definitely going to affect the profit of the banks. Then as a support from the government to the people, what happened, like initially there was announcement of 3 months moratorium. So this is good for the people, but again, like when it comes to the bank, so 3 and additionally 3 more months have been given. So moratorium of 3 months is +3. So almost 6 months is going to have a huge impact on liquidity of almost all the banks and NBFCs. So this is like the income what keeps generating. This is the cash flow which keeps coming. So when there is like stoppage of that, and there is a moratorium given where people can pay after 6 months, or it is getting deferred for 6 months itself, is going to be tough. And today we see almost 70-75% across different verticals or customer segments. So they opt for this. So that is again going to be a bit of struggle. And again, to come out of this moratorium, post-moratorium, making all these people make the payment, or probably we are not sure whether business will go in as expected. Hopefully it should go, but in case. But then all these are going to be always a bit of worry for all the banks. These are the direct impacts. And also like most of the banks have huge exposures to industries like auto industries, auto ancillary, aviation, hospitality, then you have travel, real estate, infrastructure. All these are like currently it is all badly affected. Even before the COVID also there was a stress of cash flow across these segments, and there was a dip in demand across these segments. But today, with this, the badly affected areas are going to be aviation, even auto is very badly affected. Last 2.5 months, you would have read that not even, the bookings were in single digits, and only happy or favorite thing is like last post May 25th, we are seeing like bit of movement in almost all the segments. So we are all like expecting and hoping that things will get revived. And this one more thing, like most of the banks, whatever loans they have funded to individuals, basically like they are all based on their income. So we normally say in the banking jargon as FOIR, that is fixed obligation to income ratio. And today we see a lot of company or a lot of news we hear that they are going to reduce the salary by 10%, 15%. They are going to reduce the headcount or staffs by almost 1/5. So all this is going to impact the income. So even a small income, like normally FOIR is taken up to 50 to 55% when they fund a loan, whether it is like business or salary. So when there is even a small bit of 10 to 15% dip in the income, this is going to affect the repayment. So there also like because of this, we are going to see dip in repayment, which is going to have a stress on the portfolio. Then also like because of this unemployment, we see there will be deterioration of household income, and also like this will directly get linked to the delinquency. So these are the direct impacts which is going to happen to the banks, which is already like we are seeing the stress. Then when it comes to liquidity, maybe like larger banks with all the support by the government and RBI, they will be able to come out of the liquidity issue. But there are some small banks and there are some smaller, weaker private sector banks. You have cooperative banks, which are all actually like it is not only the nationalized and big banks which work. these are also very much essential for our economy to run. So all these banks will have difficulty to maintain their liquidity, and also like we see most of the customers of the smaller, weaker banks will start moving to the stronger banks. So that is one impact which will affect the liquidity of almost all these small banks. Then, as I told you, with 6 months of moratorium, which will continue till August, you can see that this is going to have a stress on the balance sheet of almost all the companies, maybe next quarter, like quarter 2 and 3 of next financial year 2021. So there's like a bit of long-term issues what may happen, but then all the banks are trying to work out on how they can come out, or probably they were working out on a methodology where or they have to implement some new methods to come out of all these things, which I think it's going on with all the banks. Then one more thing, it's not only the banks, there are also NBFCs. There are a lot of big NBFCs which fund almost equivalent to the bank, and they also have almost 25 to 30% of the market share what they have. So today, with the credit loss in portfolio, which is going to happen, or probably with this moratorium given, or stress in the segments, each segments, which will have stress in the portfolio. So then what happens, there will be lower in securitization deals. So normally, all these NBFCs, they raise funds by securitizing their existing portfolio, which currently or normally otherwise it is quite good. So that way, there will be liquidity issues even for the NBFCs. So to sum up, these are the direct impacts which may happen because of the COVID pandemic which has happened, and all because of this lockdown, business not happening, and cash flow is not seen in the market, liquidity crunch. So these are the direct, probably maybe if any one of you have noted down, we can discuss in later once we come to the last session. And since customers are the people who are actually directly linked to banks, maybe I will just touch upon few points on the changes what we have seen in this customer segmentation or their behavior in last few months. And the change is quite drastic. We never expected that these things would have happened at also very, so soon. So today, everybody are restricting themselves in going out, and also the entire physical movement has been curtailed. Maybe few people have started moving out. So people visiting to branches has come down drastically. People have changed the way they work. I'm saying this is not nothing related to banking. I'm saying across any companies or any people in any segment or any industry, they are not currently working as what they used to do. So today they have changed the way they work, they have changed the way they shop, and probably they have changed the way they communicate. Today, for example, I think everybody in 2 months would have tried connecting to the old colleagues, so which we never thought would have happened. And today, either Zoom or team call has become day-to-day affair. Today, the morning calls are happening through video chats, phone. So sitting at home, things are happening across industries. It's not only, and exceptions are few. Then today currently the attitude of people have changed. So today they're sticking on to the very basics, and they're only thinking of essential items, and constantly worrying about whether if they go out, will they get infected. So the priority has changed. People who wanted to get into or buy luxury items, they have just kept it, probably have stalled their thoughts. So today it is most of them have thought okay, let's survive. Maybe we have to earn, save it, or maybe the basic things is what I want to live. So it's a huge shift on the spending. And today, there is no supermarkets, no malls, or there are malls, but people are not going. So spendings across all these outdoors have come down drastically. So though this point is not directly linked, but consumer behavior is directly linked to the banking sector. So I thought I will just touch upon. And if you see in last 2 months, the entire consumer behavior has altered beyond recognition or imagination. So earlier it was quite different, but today, I mean, even each one of you think yourself what you were having, like, I mean, thoughts in mind about your holidays, about your spendings. So today, when you see, it's all fully, I mean, almost like a 360-degree change has happened. And we are happy to live with this. And now almost everybody have started getting acquainted and, I mean, getting used to this type of living. And one more thing, like, I mean, what we see as a positive side is, like, I mean, though from 2015 or maybe even earlier, no, we have seen that e-commerce boom, but last 2 months, like, no, it has fully changed. So today, the complete shift towards e-commerce business has happened. Even, like, no, I mean, buying grocery or vegetables has become through e-commerce. And when I get into, like, no, I mean, the points or, I mean, the research, what I've seen or heard or seen in the paper, almost 9 out of 10 customers have changed their shopping habits. Almost, like, no, I mean, earlier 50% of people who used to go out to buy this grocery or, like, no, I mean, physical stores where they used to go, that is fully almost 50 to 55% is directly shifted to online purchase. And then, like, earlier, like, no, with the new bigger shopping malls and big stores coming, like, no, I mean, people used to go there, shop there, and kirana stores, which were earlier, like, no, in 80s or 90s, which were near to our house, which we used to go and buy, was almost like no nil. And with this pandemic, we have seen the support given by the kirana stores across, how they have worked, how they have, like, no, I mean, any product you want, you call and tell them the next store near your house, no, within a day or two, he brings the stuff for you. So we have seen, like, no, I mean, the support from others, how kirana store, the importance has come back, how, like, no, we realize that no people near us is going to maybe support us a lot. And then, like, no, the loyalty, even after this, I think, like, no, I mean, will be towards them. So we will see them, like, no, flourishing, which has to happen. And because it's like, no, I mean, it's mutual support. So they have supported us, and now we are going to do that. And also, like, I mean, we have seen digital adoption movement is likely to carry on. Even, I mean, now we have seen, like, no, people, we have moved. So with the phone, everything is happening, whether it is bank or purchase or any, I mean, all your morning meeting, Zoom call, your, I mean, assignments being submitted by kids, everything happens through either laptop or phone. So digital adoption movement is going to stay and continue even after lockdown. And this is going to be a way of life. And all these, like, no, buying groceries and personal care also is going to be online. So this is, like, no, basically these are the changes what we have seen or probably we have undergone in last 2 months. And this is anyway going to directly impact the consumer behavior. So as a bank, now what next? So that is one thing which really is, like, no, I mean, going to see how banks are going to sustain, how banks are going to, like, no, I mean, in this competition, how they're going to survive. The strongest and the fittest will survive. The faster, who changes faster, who adapt to the change faster is going to survive. So these are the points, like, no, two things on the direct impact on the banks, which has happened because of this, and the change in behavior of the consumers and the customers because of the pandemic, what has happened. And now I will just touch upon a few points which RBI or our central bank has taken. See, this is something like, we know that our banking system is quite strong, and the regulations and the process set by the RBI central bank is quite strong enough, and all the banks are under full control, and we know that almost, like, it may not fail. So initially I was just mentioning about the pain areas and the direct impacts because of this COVID, what major banks have been affected. So to come out of this, there are a lot of schemes which has rolled out by the government and also by RBI. So if you see last 2 months now, we have seen a lot of aggressive rate cuts announced multiple times. It's not first. So initially, they started in March. Then we have seen once again May, we have seen a change. So in last 3 months, we have seen multiple rate cuts by RBI, which will help almost like pump in a lot of money. So I think almost even by reducing the repo rate by 100 basis points, we will see liquidity of almost 1,40,000 crore of money coming into the system. That is one thing. And RBI has granted the 6 months moratorium to almost all the customers. This is for all the customers, and banks, like, irrespective of any names, we can say that they have directly given the benefit passed on to the customer. So that way, like, they have eased out the pressure on the banks and as well as on the customer. And all this, like, though it is moratorium, there is not going to be stress. And the change in NPA process also has been initiated. So all these, like, need not be part of their provisioning. Then RBI has also, like, reduced the CRR ratio by 100 basis points, which also, like, added a lot of liquidity into the system. And still, we are not sure when this will end. So hopefully, and to support all the banks, RBI will surely come up, and whatever they have done, I think it is encouraging for all the banks. And also, like, there was also a point where a dividend need not be paid by any banks today, which also, like, is going to ease out the cash flow. So these are the few points. And if you see, even from the NBFC segment or housing segment, almost 10,000 crore of refinance has been allotted by RBI to NHB. NHB is the National Housing Bank, which is again directly under RBI. So this will also ease out the pressure on the builders on the real estate front to some extent. So that also should help out. So these are the few things. And like apart from that, the government has tried to, if you see the scheme which has been mentioned by the government, like a lot of comprehensive package has been announced by the government, which includes, it was like almost 20 lakh crore is what the overall package. So I can just highlight about one particular thing where all these SMEs or MSME, there is a, package of 3 lakh crore to be given to them without guarantee. See, this is like, all the banks for their existing MSME, SME customers, they can fund 20% of existing loan amount without any guarantee. Sorry, without any collateral. And this is guaranteed by the government. So there is no stress from, for the customers, even for the bankers. And this money is like actually going to help the cash flow on day-to-day basis. Today, after 2 months, they're all stuck. So they don't have cash flow, or probably the supply, their collection has not happened, or money is not coming, or transaction has not happened, or their supplies are not paid, or they're still waiting, and they have almost like, they have utilized the money what they have. So this 20% or 30%, whatever is like, without any collateral, it's easy. And it is like, for each and every SME customers who are not defaulters, who have been paying well, they are going to get this money. And already all the banks have started approving and disbursing these cases. We have seen that. So that is actually going to ease out the daily, working capital issue of all these small-time business people. So that is one thing which government has done. So now it is like how banks are going to adapt, how banks are going to change into like this new set of environment. So also like these are all in mind of everyone, but then I will also mention how last 2 months bankers have worked. See, we have heard of hospitals, doctors working, policemen working, defense people working, but even bank was also part of essential items. Almost all the banks have been functioning, all the branches were functioning, though not with full staff strength, but at least with 30 to 40% of people were coming. All the admin teams, like of the various banks were almost working every day. Then social distancing was practiced. So it's not that they took some time. All the bank immediately on 23rd, the lockdown, 24th or probably 25th onwards, they adapted to the new way of working. So social distancing was done, precautionary measures were taken to keep the premise sanitized, and also disinfect all the branches. So care was taken to ensure that none of the staff or employees are affected, neither the customers who come to the branch getting affected. So this was taken care, and we have not heard or seriously seen any major transmission of disease through these banks. So almost all the banks have done this. It was like sanitized properly, people were there, and then rosters were given for the employees. Like today, I mean, if you have people, they were coming in alternate days, so that like everybody get the option to be at home and probably also come to office and ensure that the operation is not getting affected. Then if you see, none of the ATMs across the country had a problem. It mean long-term problem, maybe like short-term they did not have cash, but it was ensured that all the ATMs were loaded. And BCP team, the business continuity team across the banks were working throughout. Even it is not like 12 hours, they were extending almost to 18 to 20 hours in most of the banks, where they wanted to check how their employees are safe, whether they're reaching home without any problem, whether like next day they are tested, then customers who are coming are not affected. There are enough sanitization materials in the branches. Then also like all this was done so that the operations does not get affected. So throughout this last 2 months lockdown, the basic banking was happening. None of the customers got affected, though there was a bit of delay in like loan approvals and all got stuck initially because they were all waiting what to be done. So that also has started moving in. And the earlier point I told on MSME, where there was like support from the government to give this credit guaranteed top-ups, which has already started, which we have started seeing most of the industries functioning, most of the segments are functioning. And apart from this, like there are other segments like daily essentials, like you have medical shop, groceries, milkmen, all these people like today are given major priority, and they are all funded so that like they continue with their business. So now this is what has been happening, but this is not enough. So what next? Okay, so we can't live with this like or probably like worry about this. So now it has become a way of our life. So we have to continue. So what next? And each and every bank, as I told you, the strongest will survive. The one who will transform to the customer expectation will survive. And this is service industry. So there is nothing like service. So whichever bank gets into the service, or whichever banks like are top of the transformation, they will survive. So today, maybe I will just see how the banks have to know. This is my perspective, and probably like we can discuss. So today, like banks have to actively consider the immediate need of the people. Okay, and they have to actually utilize this as an opportunity. It's not like a threat. So today, the opportunity is huge. We have closed down, we have shut down, and the opportunity is like people have migrant workers have moved out. They've gone to their locations. Probably if you see different states, like because want of industry, they were moving. They did not have employment, so people were moving to bigger cities. Today, it's an opportunity for small cities to come up with industry. So you have enough resource there. So the banks, like today, now we have to support or facilitate quick loans to these people wherever it is required, so that like they can probably quickly return to stability and normalcy. So it's a huge opportunity, and everybody like have to run to ensure that they are all whoever going first, whoever are like going to serve better, are going to be like appreciated, and then the relationship continues. Then also like banks should respond well to this unprecedented challenges. Like as I said, like we have seen how the Kirana stores are supported, how the medical stores, like 24 hours, you call them, they come and give. We have seen the local vendors. So we have to help this society. This will not only like increase the business, but this is going to increase the trust and the reputation of the banking industry. So earlier, like there was always a notion that money is only given to people who are financials are strong, who have running good business, but now it is changed. So it is like a mutual growth. So you fund them, they grow, and then now the repayment is reciprocated, and it is like a relationship, both keep growing. So that is one thing. Then maybe I can also point out the few changes what we have seen, like because of this. It's not that it has happened drastically. Already there was huge process and changes happening, and most of the banks were getting to digital platforms. but always there was like, I mean, a mix of both. So mostly it was like, traditional banking, and almost the nationalized banks were all still in the traditional model and mode of banking. And then like the new generation banks and the bigger private sector banks have gone into digital. So with this, like, I mean, everybody are thinking about digital. How to meet, serve a customer without meeting him, how to serve a customer from remote location, how to serve a customer without people, without having big buildings and branches. So today, like, I mean, it's a lesson. So if you see each one of you, whether it is banking business or any other business, or like, I mean, teaching, I've seen like, the way things have changed. I see my daughter getting into online classes. Similarly, like, it has disrupted the entire industries. Same thing has happened in banking as well. So people today are thinking, banks are thinking about digital, conducting like, without any personal interaction, and by completely digitalizing, and maybe by remote customer transaction is what are thinking. It's already happening, and most of the banks have shifted. Today, if you see, like, most of the payments happen through cashless, and cashless and contactless payments are happening, and those physical notes have come down. So it is plastic money or whatever cards we say. So it's already shifted. So now the percentage maybe like now from 50 it should reach 75 to 80 or even 90 very soon. So even today, like now you sit in your house, you can open a bank account just like through online. Any banks now today have that option. You can sit in your house, you can apply for a loan, personal loan, you get in 10 minutes, your loan is approved. And today, like, the meetings are happening, customer meetings and bankers. So since I'm in credit, I can say you that like earlier we used to go visit the business premise, understand, see them, talk to them for 2-3 hours, and then come back, decide. So today, like, it's quite, you see them on video. There is a system like, we can video record the entire business, what is happening. We can video record the KYC, what we say, that is like your documentations is all done digitally. So there is no requirement of going to the bank for even for any basic needs, which now every banks are getting into this. So hopefully, like, this is one blessing in disguise. I can say that all this has made us think differently. And today we don't want a bigger branch, which has a huge cost. So even without, with small branches and people working in remote locations is like, can still operate all the banks very well. And this is going to be very cost effective also. So these are the things what we need to actually, as a bank, all the banks need to do is, and I think everybody are getting into this. So now maybe like I will get into the last segment where we can say what is way forward, and which we keep hearing, which is the new normal. So the current crisis has exposed the banking industry and financial segment to new ways of working. That is like, we, at least in banking, there was nothing like work from home earlier. So we have heard only that in IT industries. So today you see this in every segment. So teaching, we never thought it will be online. So today we see that like, when there was online institutes coming, the registration was not more than 10%. So today it is like going to be a way of life. Same way, this has disrupted the way we are going to work. Then if you see this 2 months, it is not like, it got closed fully or there was no banking. So industry has made a smooth transition to work remotely. If you see like, people were working from home, but still things were okay, which is likely to shape the cost, as I told you earlier. So this like, now people will think of bigger buildings, not opting for that, huge rent, cut on rent, and people also can be like, optimally used. All this is going to happen. Then even if because of this last 2 months, we, or generally all the banks, like, what they've done, they were just trying to push self-service by customers. They were like, just trying to avoid customers or tell them like, not to come to office. You can just call and we will get things done. So that self-services was accelerated, and like, most of the automation initiatives were pushed. So all this was tested and tried in this last 2 months, and it was successful. So that is going to be the way of life going forward. Then all the banks, like, to survive, as I told you earlier, have to adopt to the innovative approach to digitalization of all the process, whether it is like, opening account, funding a customer or transacting or like payment making, everything going to be digital, and that needs to be pushed, and that is going to be a revolution. It is already, so we can see that all this, the earlier planning was there, but execution has happened in this 2 months by almost all the banks and to the extent of almost 90%. So this COVID, whatever at home or the 2 months break, what people think they have got, it is not actually a break. It is the testing things, what we have done, we have tested, and it is good to go. More than good to go, it is confident to go. Then one more thing is bank should and be proactive to know the reality at ground level. See, today it is nothing like, since I'm in credit, I can say I used to have a notion that okay, I have to go see the customer, I have to understand his business and then do. But today nothing like that. So we need to equip ourselves, understand the market, and then even if I'm sitting from remote, I should know what is happening at the ground level. So it's going to be a learning for each and every banker. Otherwise, you get into a job, then it is going to be steady, you continue, but nothing like that. Now you get into a job, you should know how the market is happening, you should know what is happening in the ground. So all the people who survive this, who transform this, who learn, is going to be successful. Then underwriting is going to be digital, which is already happened. Your collection, earlier we used to go and collect. Suppose somebody want to make a payment today, you just send a message to him. It's a link, so they can go inside and just make the payment through either any of the app, financial app. Either it can be from any of Paytm, can be like Amazon or the bankers. Each bank are having app today pays up, so it can be done. So payment or collection is going to be digitalized. And even business generation, today you get a lot of messages or links, so you need not even go to the banks. So the options are given to the customers, so it's open. So to me, I can say that all this it's like a blessing in disguise. We have learned a lot. Most of the bankers have learned a lot, and you can see the major transformation happening, and it is going to be core service and digitalization in all the process which they have in the banking. So this is what I have to say about things. Maybe any of the points you can, in fact, wanted any clarifications or something probably I can share my thoughts on that. So now I will leave it to you guys.
Thank you very much, sir. We are very inspired by your wonderful talk. We do have a couple of questions from the participants. The first question is, which sector are the major credit borrowers?
Pardon, can you come back?
Which sector are the major credit borrowers?
Okay, see, it's I'll just understand what the question is. Where they are getting, they wanted more credit is what you're asking. Which segment?
Absolutely, sir. And the which sector in the current scenario? Yeah,
see, currently, we see a lot of stress happening in the real estate segment. So today, they are more. For example, I'll just run through the other one. See, I was talking about the essential items. Okay, today, they actually don't want funds because the transaction was happening the last 2-3 months. No, it was not shut down. They were doing business. Similarly, if you see smaller industry, they were all doing well. But when it comes to the real estate sector, it is actually come on full standstill. And there are also a few others as well, like auto, travel, and also this hospitality segments. All today they don't have any money. So they're all credit hungry today, but not sure how much we can fund to them. But primarily it is real estate and travel segment, which is currently struggling for credit and which looks a bit stressed.
All right, sir. The next question is, what would be the financial stability of Indian banks in future?
Yeah, see, one more thing. I just wanted to stress upon a few points on the banking sector, what we have across the globe, when banks were failing, we were still strong. Exceptions like very few. It is not because of the liquidity issue, or it is basically because of the mismanagement. So as a central bank, RBI is having a full control on all the banks. So today, when I compare with the other nations or internationally, India is having one of the strongest banking system, and the whatever the stability or liquidity of the banks what we have currently, it's quite strong, including all the private sector bank which we have seen, keep hearing on that. And then RBI plays a major role in controlling them. Probably now this reduction repo rate, and whenever required, now we have seen them getting into, and almost all the banks now the cash reserve ratio is quite sufficient. It is almost double is what they are maintaining. So currently, our banking system is quite strong. Only thing we need to adapt to the change so that we will be able to come out profitably. Profitability will be more. Today we see there is stress in profitability. It is basically because how they manage. So it is basically the net interest margin what they have to maintain. Okay, so banking system is strong, but it is on the respective bank how they're going to manage their balance sheet and their profits. Otherwise, the opportunity is huge. And still we know that not more than 15% of people are banked. And today, with all the tier C and D cities coming up, with a lot of small MSMEs or SMEs getting moving to the smaller cities, we see that advantage. So opportunity is huge, and system is quite strong. Only thing, the opportunity to be utilized properly and to be managed. That's it.
Very clearly explained, sir. We'll have one more question. Yeah. How merger of banks would help in strengthening banking system considering the current situation? And also, there is one more question related to this. One of the participants wants to know what is the impact of employability in relation to the merger of banks, employability of the bank employees.
Yeah, see today, we keep hearing the merger on nationalized banks. Most of the nationalized banks, because the one is they are large in size, and the operational inefficiencies are seen on almost all the banks. So maybe because of to bring in cost effectiveness, they're just trying to merge the bank. It is going to help in business, because for example, maybe if I take, we had recently seen few mergers. I will take example of Bank of Baroda, Vijaya Bank, and Dina Bank, which got merged. So each of these banks have their own peculiar customer base, and have their own different. But maybe if you see South, Vijaya Bank was stronger. When you see East and North, it was Dina Bank, and then Bank of Baroda was quite strong across. But still, they had a bit of slowness. A bit of what do you call lesser numbers in South. But then this merger would have probably helped in, one is maintaining the cost of funds. Second thing, maintaining the customer service. So today you have a lot of products which one bank has and others may not have. The synergy what this bank has may not be with the smaller bank. So what happens, this merger will help in bring synergy. One thing, use the staff to the optimal level. But this all depends on how the execution is going to happen. It is not just going to merge will help, but then we have seen few mergers which still they are struggling. But the merger is going to be beneficial, and only thing the result is going to be on the execution part. So how they execute it properly, how they are going to deploy the staffs, how they are going to bring in the optimal productivity from each staff, how they are going to reduce the cost. All this matters. So merger is definitely going to be a strength for those banks. Primarily, their balance sheet becomes strong. They liquidity will not be a problem. The customer base will be huge, where they can still go. Their internal customers can be tapped. So opportunity is huge. Only thing how it is getting executed matters. So we have to wait and watch how the new banks which recently got merged are going to come up.
But we do have the employability issues that's being discussed.
Yeah, see, that is, it is not employability. Basically, there were places where it was not properly, maybe properly deployed. So today, once you see that So you have to see the returns on employee. So you can compare, you can check the banks, what are the returns per employee. You would have seen there are small banks now with huge returns from the employee. So now we have to see how they can deploy the staffs, how they are going to and utilize and ensure that the productivity is at optimal. And this is not going to just reduce. I don't think the number of people will get reduced. So when the geography opens, you should have people. It's all depending on the business. So when the business grows, the requirement of people also comes. So this return on employees is quite a critical parameter which affects the recruitment or number of people what they want to intake. So basically, how the productivity increases, there is a huge job. Nothing people are going to lose job because of merger. No, only thing they have to ensure that the optimal productivity level comes, and then things will change. You would have seen there are, if you see State Bank of India, the productivity is quite high. It's not that though it is quite vast, it is very high compared to many other banks. And we have a lot of private sector banks where it is almost double what you see in most of the smaller banks or nationalized banks. So the scope is huge, and it's how we transform. It's not, people should not think it's a government job. You just go there and come. No. And today, you would have seen bankers, whether it is nationalized bank or private sector bank, they work late. It's not that because basically that late working needs to be changed. They have to bring in efficiency more than taking more time. So all this matters to improve the productivity, and then I don't think there is any issue of staff retrenchment or no hiring. The demand will be still there. So, and if you see across the country, the highest number of recruitment is happening in the banks, and I've seen that, and we still see that even in this COVID time, last 2 months, there are a lot of branches which got opened by many of the banks. People have been hired. So still, if you see, hiring is still happening. So I don't think that the merger will be a problem for hiring.
It was a very wonderful explanation, sir. And we are so happy you being part of this 7th International FDP. On behalf of SIIMS management and the entire team and the participants, I would like to thank you very much for your insightful talk. Now, I request all the participants to fill in the feedback form that is posted in the comment box and the chat box. That will be live only for 30 minutes. We kindly request you to fill the form within the time limit. We will be meeting tomorrow by the same time, 10 a.m. tomorrow, with an exciting new topic, a new paradigm in managing business after lockdown by Mr. Ramji Raghavan, management consultant. Thank you very much for joining us today. I thank again the resource person for his wonderful talk today. Thank you very much, sir. It's an honor to have you today for our session. Thank you very much. See you all tomorrow. Thank you.
Yeah, thank you from my side as well, and for giving this invitation and opportunity. Thank you.